Hi, I'm Grant Stephen,
And I'm Chris Bernier.
and we're the two investment guys. Welcome to our first show of 2013, and we thought we'd kick it off today by a little bit of forecasting. Chris, when we look back about a year ago, you and I said that 2012 was really going to be a couple of things. One is slower for longer and lower for longer, and slower in terms of the economic and earnings growth numbers, and lower in terms of interest rates. And what we meant by all of that was things are just going to be muted for longer than a lot of people were thinking. And 2013, I think, is going to be similar, so we'll coin the same phrase, except we are willing to say that we're going to see bond yields rise a little bit. Now, we're going to talk about that in a second. But Chris, why don't we talk about the 2013 trending that we think we're going to see?
Sure. Well, halfway through last year and what we're seeing into this year is a continuing improvement in employment data, both in the U.S. and Canada. Both jobless claims have been declining and unemployment has been improving. If we look at the housing data in particular in the U.S., we're on a steady improving trend there, although we still have a long ways to go before we get back to more normalized housing sector. It is on the right path. And we're starting to see an improvement in China's growth. We saw a bottoming from about September, October, and through the end of the year, and numbers seem to be improving there. And what we expect is through this year to see maybe a movement from more defensive positioning in portfolios towards a more cyclical stance. And so that's something that you may want to chat with your advisor about.
Right. So if we talk a little bit about an earnings trend here, I would suggest that earnings last year, Chris, were pretty good overall. We're likely to see that continue, although be a little bit more muted on the actual growth of earnings. So remember, we're still talking about fairly robust net profits for most corporations and great balance sheets and things like that. But what we're going to see is a little bit more muted growth numbers on the profits. Now, we're coming up to Q4 reporting. We're going to start seeing some of that this week and through the next bunch of weeks, and Chris and I will update you on that as we move through it. But one of the things that we think we're going to see on the trending side in profits is that if we're right on the macro data improvement, then we're going to see some confidence restored to corporations, which should enhance their CapEx budgets, in other words, their spending as well. And if we can get some confidence in the CEO offices, that could in fact change the profit scenario, but we're talking a couple quarters out.
That's right. The big story, of course, heading into the end of last year was the budget negotiations in the U.S. and this whole term fiscal cliff, which we're probably all tired of hearing. Anyways, they did get past some of the aspects of that, the tax increases. Some of the employment tax cuts that were in place have expired, and now we're into the next phase, which will take us through into February and March, which will be about spending cuts and the debt ceiling debate once again. So expect the markets to remain maybe somewhat range-bound through the next couple of months, and volatility likely to increase as we approach some of these deadlines.
Yeah. So wrapping it up, our forecasting is not we're going to specify what market returns are at particular points. We're really talking about some of the trending that we're seeing here.
That's right. So I want to thank you again for your questions and comments. Please keep them coming. You can contact Grant and I at twoinvestmentguys.com.
Join us next time. We're going to continue our discussion on some of the market dynamics and the things we need, that we think you need to be keeping your eye on. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys.